Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that I think a lot of people don't talk much about, but this company is very interesting. Some of the key things that I want you to think about is 47% upside, 19 years of consecutive increases in dividends, and 30 years of dividend streak without a reduction. And one of my sources say it is also 38% undervalued. So if you're interested, sit back, enjoy the video. Hope you like and subscribe. If you're new to the channel, just wanted to say aloha. As always, please remember this is not financial advice. This is just me sharing. With that said, let's take a look at this company. So this company that I'm talking about is R Berkley. Ticker symbol is WRB. It is an insurance holding company, operates in a commercial lines writer in the US and international. They do like workers' compensation, accident, and health insurance. So if you want to learn a little bit more about it, go check out their website. Some of the things that I do when I want to learn about companies, and I go to their website, I look for like investor relations. Then I kind of look at their presentation and then just look at it. So sometimes if you want to learn more about the direction, you can go to their webcast. But if you look at, one of the things I really like to look at is the dividends. So growth in dividends per share, as you can see from here. This is a chart. So WRB has paid cash dividends without interruption since 1976. So pretty solid. You can see it's 11% CAGR in regular cash dividends. So you have that special dividend as well as your regular dividend here. So now if we switch over to simply safe dividend, based on their dividend safety score, they rate it as 98, which is very safe. The dividend yield is 0.52. Market cap is about 17 billion. Looking over to the key metric, you can see payout ratio is about 10%, which is very low for insurances. Now, recession, they have maintained their dividend based on the 07-09. Looking at the dividend growth, you can see the last 20 years up 10%, which is fast. Last 5 years, 8%, which is very fast. And then you got your latest, which is 8%, which is fast as well. Now, if we look at the chart, again, look at that. I always like to look at whether the chart is going up. So in this case, as you can see, it's going up. Uninterrupted dividend streak of 30 years without a reduction. Dividend growth of 19 years consecutively increases. Now, if you're looking at when you're getting it paid, if this is something you're interested, usually it's a quarterly in the months of March, June, September, and December, and your annual payout would be 35 cents. The ex-dividend has passed March 8, then you get your March 23 payout. Now, if we go over to some of the key metrics, this one says it could be overvalued. So one of the things I like to do is look at different sources to kind of compare what other companies think about this stuff. So for this one, they said that this could be overvalued. So now let's look a little bit more in the financials. You can see the payout ratio, earnings payout ratio is 9%, free cash payout ratio is about 4%. I always like to look at the return on invested capital. So you got 14%, return on equity is about 16%. And then you got also over here, total sales in billion, and you got that. And then you got your sales growth, you can see 17%, pretty much almost the same as the 2001. Earnings per share has gone down from that one, you can see. Now, if we swing to tip ranks at the time of this video, it is at 67. Rating is about moderate buy based on 7. You got 5 buys and 2 holds. 45% upside. The target is about 97, with the highest going as 106, and then you got your 97 as the average, and then the low is 85. Now, if we look down to some of the analysis forecast, you can see pretty much a majority of them says buy with pretty good amount of upside. You can see 46%, 40, 53, 40, and then you 50%. So you got a bunch of holds in there, but for the majority of it, you can see pretty bullish on this company. Now, if we go over to Webull, based on their analysis, 14 of them says it's a buy. You got about 50%, and you got like 42% hold, strong buy. Price target is pretty similar. 73 is the high, 66 is the average, and then 57 is the low. If you look down to the institutional holdings, you can see 178 have increased. 99 of them are new. You have about 168 have decreased, and then 35 have sold out. Now, if we go over to CNN Business, based on their price forecasts, about 73 for the high, 66 for the medium, and then 57 for the low. You got your analysis recommendations of 8 buys, 6 holds, and 1 underperform. Yeah. Now let's swing over to Yahoo Finance to look at the holders. So you got your top institutional holders. You got Vanguard about 15 million. You got BlackRock about 9 million, and you got all these State Street Corporation 7. So pretty good amount of companies. Institutional holding is holding more than 1 million shares. Yeah. Now let's swing over to bar chart based on their price forecasts. Pretty much similar. 73, 64 is the target, and then you got 57 is the low. Based on analysis, it's pretty similar to moderate buy. You got currently you got 8 analysis rating it as a moderate buy. Now looking at the breakdown, about 3 holds, 1 moderate buy, and 4 strong buy. Now let's swing over to Simply Wall Street based on their valuation, share price versus fair value. Look at that, 38% undervalued. Their fair value based on their calculations about 109. Currently at the time of this video, 67. Now if we go over to the company overview, here is the snowflake analysis, solid track record with adequate balance sheet, and some of the rewards. As you can see, earnings to forecast to grow at almost 8%. Earnings grew about 92% over the past year. No risk detected for WRB. Now let's take a look at Robinhood. At the time of this video, it was only up 0.4. For the week, it's up 3%. For the month, it's up 10%. For 3 months, it's up 23%. For the year, it's up 32%. And then for 5 years, it's up 115%. So if you would have bought it around March 13 here, you got it at 34. You can see it kind of bottom up in the $30 from there. You can see it 30, 30, 30, and then it did a little bit in the 30s in here. So after May 15, 2020, you can see it just went up to where it's currently, and now it's 67. Now if we look down to some of the Robinhood analysis, based on their analysis, they rated also as a buy 53%, a hold of 40%, a sell of 6%. And then if you look at the research report, their fair value is about $50. Earnings is going to be at April 19, so you can see how they're going to perform on Q1 FY22. So I like this stock. I think it's a great stock to own, in my opinion. I'm still at the fence whether to buy it. I kind of like Aflac and all the other stocks. So, but in my opinion, I think this is a pretty good stock. If you're looking for an insurance company, this is one that a lot of people don't really talk about. In my opinion, I haven't seen a lot of people talk about it. But it seems to be a solid stock to purchase on. So again, please do your own research, and always remember to stay cool, keep investing, and also check out the other videos as well if you want to look at other stocks, other companies that have dividends. As always, again, always remember, please do your own due diligence, guys, and do your own research, all right? Take care. Be safe out there, guys, and I'll catch you guys on the next video, right? Take care. Aloha.